So what we're going to be doing here today is going over the positions that I have for this week, and we're also going to try to enter a new position because, as you guys can see, we have close to $2,000 left of buying power for the week. So I'm going to go ahead and try to put those into use right now. So make sure you stay till the end of the video to find out what I end up buying with those $2,000. Welcome back to a new video. As always, if you enjoyed the content, make sure to leave a like and subscribe. As I mentioned, we're going to be going over the positions that I have for this week. We're currently down $1, but I'm not really worried, just because these option premium positions, they take a little bit while to start showing profit, just because time decay doesn't really start kicking in until Wednesday or Thursday of the week, because that's when options start to lose a ton of value. So I'm not really worried. I have 4 positions currently, and we'll go ahead and start off by explaining the position on Hertz. On Hertz, we have we sold a 1.5 strike put for a total premium of $10 each, and we have 2 positions, or 2 contracts, so a total collateral of $300. So it's not a huge position. And the reason why I didn't increase the position on this one is because it is a little bit risky. And the reason why is because we go ahead and pull up the chart of Hertz. We can go ahead and see that for the week, it's up over 470%, which is insane, because about a week ago, it was under $1. So that's an insane move. And basically, the position that I have, what it means is that as long as Hertz stays above $1.50, I get to keep the full premium without having to purchase the shares of Hertz. And even though it's completely overextended and I do see it dropping, I don't see it dropping all the way back to $1.50. And the premiums are really high because this moved up really, really fast. And so, in my opinion, risking $300 is a pretty good deal, because I think the total return on investment, if we don't get assigned, is going to be around 6%. So a 6% return in 1 week without having much risk involved, that's something that I will take any single day that I see it. But that's pretty much it for that position. The next position, we have some American Airlines options, and we also have a Ford option. I'm going to go ahead and explain the Ford one first. But what we have on Ford is we ended up selling the $7 strike put for a total premium of $15. We're currently up $3 on this one. And so as long as Ford stays above $7, we're going to get to keep the full premium and not have to purchase the shares. I really don't care if we get assigned on this one, because Ford is relatively a good stock. It's a stock that has been here for a long time, and it has a pretty nice dividend. And so once they start distributing that dividend again, it's going to be a really, really nice position to hold for the long term. So if we get assigned on this one, I really wouldn't mind. It's actually a stock that I look forward to trading a lot more often once they bring back the dividend. But not really that big of a position. It's only a $700 position. But the next one that we have is American Airlines, and we actually have 2 different positions. We actually have a naked put option, and we also have a credit spread. So the credit spread, the one we sold is the $19.5 and $20 strike credit spread. And so as long as American Airlines stays below $19.50 by Friday, we get to keep the full premium on this one, which is $22. The reason why I bought this one was because, as you guys can see, American Airlines is extremely overextended. Earlier last week, it was trading at around $12, and now it's close to $20. It reached a high of $22. And if you think about it, not a lot has really changed from 1 week to another. We're slowly opening up more and more things after the pandemic, and I really don't think the new sales justify this huge move, because American Airlines, they're slowly selling more airline tickets. And so I really don't think that those small sales justify a 50% move in the company. And so I think it's going to downtrend, and as we can see, it's currently down close to 10% for the day. It was down 12% at one point. And so as long as it stays below 1950, we're going to get to keep the full premium. We can't get assigned on those because it's a credit spread, and you can't get assigned on credit spreads because you have the call option as protection. But overall, we're risking what is it? We're risking about $28 to make $22. So that is a huge deal in my opinion. It's almost a 1-to-1 return with a very minimal risk. We could take profits right now, but I really think that American Airlines is going to stay below 1950 by the end of Friday. So I am going to hold a little bit longer and try to get a little bit more profits off of this one. And if we do end up, if it does end up above 1950, we're only going to lose $28. So it's not a huge loss. The next position that we have is also on American Airlines, as I mentioned. It's a 16.5 put. And so this one is a little bit different. It's basically the opposite as the credit spread, because it means that I think American Airlines is going to stay above $16.50. We ended up selling it for an average credit of 47. And like I mentioned before, I think that, I don't think, I see that the premiums on American Airlines are insanely high right now, and that's partially due because it's been moving up a lot, and so that creates a lot of volatility in the stock. And so I think that even though it moved up a lot and the sales might not justify the current price of about $19, I still think that American Airlines is going to be here for the long run and is going to be a company that we're going to remember, and will continue to make will continue to provide airline services to people. So I don't see it going bankrupt. And that being said, I think that the whole $10 move is not justified, but maybe a $5 to $6 move is justified. And so I would be comfortable buying American Airlines at $16.50 a share, and so that's why we ended up selling it. If it doesn't end up reaching that by Friday, we're going to get to keep the full premium, which is $47, which is a pretty nice premium for the amount of money that we had to put up for collateral. And the position that I actually plan on getting into with the $1,900 that we have left is actually selling another American Airlines option. And the reason why is because these premiums are insane. If we go ahead and look at the June 12th, which is the expiration of this week, I actually plan on selling around the 14 or the 15 point strike option. Right now they're a little bit lower than what I was looking at earlier on in the day before I made this video. But if we go ahead and take let's go ahead and take the 14.5 puts and see how much return on investment we would get for the total collateral that we would have to put up. So right now it's trading at around $15 to $16, which is this one right here. So we go ahead and pull up the calculator and do $15, which is the credit we would receive, divided by 1,400. It's a total return of about 1%. If you go ahead a little bit higher and go to the next one, which is $15, go ahead and do 21 divided by 1,500. That's a little bit more. It's a 1.4 return, but it also is a little bit closer to the current price, and we have a higher risk getting assigned. Personally, I don't mind if we get assigned because, as I mentioned, I think American Airlines is a good company, but play it safe. To play it safe, like I said, we're gonna go ahead and sell the 14.5 for about $15 premium, and that's a 1% return. We probably would have gotten more if we sold yesterday, because today is Tuesday, and so each day that goes on, the time decay goes into effect and the option premiums start dropping. But I really don't care. I still think this is a solid trade, and I really don't wouldn't mind getting assigned on American Airlines for this one. So let me just go ahead and make sure that everything seems right. We're gonna go ahead and sell for 0.15, which is $15, get a total credit of 15, and we can go ahead and submit that, and she should have around $400 or $500 left to invest, I believe. Yeah, about 511. And so if I see any other possible good trades, I might use those $500. But if we don't, I'm not gonna sit here and try to force a trade. So yeah, I'm gonna go ahead and finish off the video right now, because I don't know if we're gonna get filled or when we're gonna get filled on American Airlines. So I'm just gonna go ahead and, oh, we actually just got filled. So there we go. We got filled for the new position on American Airlines, which is a 14.5 put. And so overall this week, if everything goes well, we're looking at a total premium received of around close to $100, I believe. I haven't done the math, but just looking at this right now, it does seem that it's going to be close to $100 if everything goes planned. Currently up $5, But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.